Siemens Writedown pushes employer into first loss since 2010. Zurich Siemens stated better than expected revenues for its one-third zone on Thursday as a write-down at Siemens Energy driven the engineering and technology organization into the red for the first time in almost 12 years. The maker of business software Program and Trains reported revenues rising 11% to €17.87 billion, $18.38 billion, beating analyst forecasts for €17.47 billion in a company-gathered consensus. But Siemens posted a shareholders' net lack of €1.66 billion after taking a €2.8 billion non-cash fee for writing down the fee of its stake in Siemens Energy. The loss, Siemens' first quarterly loss because the fourth zone of 2010, supposed Siemens had to reduce its full-year earnings in step with percentage steerage to 5.33 to 5.73 in line with share, from 8.70 to 9.10 formerly. Siemens owns a 35% stake inside the turbine and wind electricity business enterprise, which has had a bothered 2 years on the grounds that spinning off in 2020, with operating troubles and losses at its wind turbine department Siemens Gamesa. Chief Executive Roland Busch stated call for was nonetheless sturdy, regardless of an environment tormented by sanctions on Russia, excessive inflation and ongoing effects from the pandemic. We captured giant possibilities in a marketplace environment with ongoing high call for, he said in a declaration. Our robust Pinnacle line momentum endured, with a comparable order boom of 20% on account at the beginning of financial 2022. As well as the Siemens Energy charge, the organization's figures had been also hit via €442 million in charges associated with its choice to end Russia following the war in Ukraine. During the 3 months to the end of June, Siemens said its orders rose to €22.07 billion, beating forecasts for €19.82 billion. The 7% growth followed a 32% increase in orders in the previous area. Profit at its commercial organization rose 27% to €2.88 billion short of forecasts for €3.02 billion. Siemens, whose products are used to equip factories, homes and delivery networks, is seen as a signifier for the broader commercial economy. Demand within the European capital items zone is protecting up, Barclays Lawn, BARC, stated ultimate week, looking lower back at the consequences of different corporations within the zone which includes AB and Schneider Electric EPA, SCHN. Siemens stated it has continued to keep away from foremost disruptions due to supply chain troubles, particularly around getting enough components, raw substances and logistics. $1 equals €0.9724.